Hey everyone, welcome back to Corporate Decoder. Today we're diving into Cuentas Incorporated's latest report, and let's just say this is one of those filings that makes you wonder if they accidentally sent us a pirate's treasure map instead of a financial statement, because trees a lot of, well, let's just say interesting stuff in here. Before we get into the nitty-gritty, if you're tired of corporate jargon and want the real story behind the numbers, make sure you're subscribed. And hey, we have a growing community over on Discord. It's linked in the description below, so come hang out. Alright, so Cuentas Incorporated is filing their quarterly report, a 10Q. This report covers the period ending the 31st of March 2025. Now, when we look at a 10Q, the most crucial part for us, the bottom line, is always the financial statements. It's like looking at a company's report card, what happened financially in the last 3 months. Let's start with their balance sheet as of the 31st of March 2025. Imagine this as a snapshot of what the company owns and what it owes at that exact moment. They have total assets of roughly $109,600. That sounds like a decent amount, right? But hold on, digging a little deeper, where is the actual cash? Their cash and cash equivalents are listed as $0. Yes, you heard that right. Zero cash, that's like a lemonade stand saying they sold 1 million glasses of lemonade, but have no money in the till to buy more lemons. When you add up all their current assets, things they can quickly turn into cash, it's about $1,096,000. But remember, zero of that is actual cash. Most of it is listed as investment in unconsolidated entities held for sale, which is $800,000. This means it's an investment they plan to sell, not money they can readily use. It's like having a valuable painting in your house that you want to sell, but you can't pay your bills with the painting itself. Now, let's look at the other side of the coin. Liabilities. What does the company owe? They have total liabilities of almost $4,647,000. This is a big number compared to their assets, especially when you consider how little actual cash they have. Then Therese, the stockholders' deficit. This is where things get really interesting and not in a good way. Their total stockholders' deficit is a negative $355,100. A deficit means that what the company owes is more than what it owns. If you think about it like this, if they sold everything they own, they still wouldn't have enough to pay off all their debts and obligations. This is a huge red flag, suggesting the company is in a really tough spot financially. Moving on to their income statement, or as they call it here, the Statement of Comprehensive Loss, for the 3 months ended the 31st of March 2025. This shows their performance over that 3-month period. For the 3 months ending the 31st of March 2025, their total revenues were $0, absolutely nothing. Compare that to the same period in 2024 when they brought in $639,000. This is a drastic drop. It means their core business operations generated no income in this first quarter of 2025. Because they had no revenue, their gross loss is also zero. That might sound good, but it's only because Therese nothing to lose from. In the prior year, they actually had a gross loss of $69,000, meaning their cost of providing goods or services was higher than the revenue they generated from them. Their operating expenses were $283,000 for the first quarter of 2025, mostly in selling, general, and administrative costs. This led to an operating loss of $283,000. Again, no revenue means no profit from just running the business. In comparison, the previous year's operating loss was $843,000. So, while the operating loss looks smaller, it's because they basically stopped doing business. And the bottom line, their net loss for the first 3 months of 2025 was $399,000. This is an improvement from the $445,000 loss in the same period of 2024. But remember, this improvement comes from essentially having no revenue. It's like saying you had a great weight loss week because you stopped eating entirely. Now let's look at the statement of changes in stockholders' deficit. This tells us how that deficit changed from the beginning of the period to the end. On the 31st of December 2024, their deficit was already over $300,000. By the 31st of March 2025, it widened to over $350,000. This increase in deficit is largely due to the net loss they incurred during the quarter. They also had some small positive adjustment for share-based compensation, adding $18,000 to their equity, but it was nowhere near enough to offset the losses. The statement of cash flows is critical. It tells us where the money came from and where it went. For the first 3 months of 2025, they used $15,000 in cash from operating activities. This is after accounting for their net loss and other non-cash items. In simpler terms, their day-to-day business operations are burning through cash, even if it is a smaller amount than last year. In 2024, they used $310,000. The fact that they used less this year is mainly because they generated zero revenue. Under financing activities for the first quarter of 2025, they had $0. This means they didn't borrow any money or raise any capital through financing during this period. Last year, they actually brought in $133,000 from financing activities, mainly from short-term loans. This lack of financing activity in 2025, coupled with the zero cash on hand, is deeply concerning. And here it is again, the final number for cash and cash equivalents at the end of the period, $0. This is a stark figure. Now, let's look at the notes to the financial statements, which provide more context. Under the going concern section, they basically admit that Therese substantial doubt about the company's ability to continue operating. That's corporate speak for, we might go out of business. They state they have zero cash, a negative working capital, and a big accumulated deficit. Their survival depends on raising more money, which they haven't secured yet. This is serious. It also mentions that on the 21st of April 2025, they entered into a joint venture with World Mobile Group Ltd to operate a mobile virtual network operator business. Cuentas holds 51% of this venture and World Mobile holds 49%. World Mobile is contributing $300,000 in capital, and Cuentas is contributing its MVNO business. This is clearly an attempt to create a new stream of revenue and hopefully shore up their financial situation. They are also focusing on developing their Cuentas mobile solution, which is a cellular telecommunications offering. This section talks about things that happened around the reporting period. There were several settlement agreements with creditors. For instance, they settled with 1800 Diagonal Lending, LLC for $112,500. They also agreed to sell their interests in Brooksville Development Partners for $800,000, and these funds were used to pay off some major creditors. This shows they are actively trying to reduce their debt. The disposal of their interest in Brooksville Development Partners for $800,000 is a key event. They explain that this money was crucial for settling around $1.14 million in debt with 4 major creditors, for an actual cost of about $666,356. This is a significant move to clean up their balance sheet. Then there are mentions of several convertible notes. On the 22nd of September 2025 and the 1st of October 2025, they entered into agreements with World Mobile Group Limited for about $385,000 in notes. These notes can be converted into company stock. They also issued convertible notes to their CEO, Shalom-Arik Maimon, and others on the 17th of October 2025. Some of these notes were already converted into stock. This suggests they are using debt and convertible instruments to raise capital, often with strings attached like board representation or specific rights for the investors. An engagement letter with Maxim Group LLC, dated the 13th of October 2025, shows they are preparing for a possible follow on public offering of their common stock. This means they are trying to raise more money by selling more shares to the public. They are planning to give Maxim Group an underwriting discount and warrants. This is standard practice when companies go public or try to raise more capital through stock offerings. Under controls and procedures, the Chief Financial Officer stated that the disclosure controls and procedures are not effective. This is a significant admission, meaning they are not confident that all important information is being properly recorded, processed, and reported in a timely manner. Both the ability to record and process information and to communicate it to management for timely disclosure are flagged as issues. Therese also ongoing legal trouble, most notably a demand for arbitration from Secure IP Telecom, Inc. stemming from a previous agreement with a company called Limecom. Secure IP is alleging that Cuentas received certain transfers from Limecom during a time when Cuentas wholly owned Limecom, and that these transfers might be avoidable. Cuentas claims they don't have liability and that Heritage, an unrelated third party who owned Limecom, indemnified them. However, a review of their book shows transfers of less than $600,000 from Limecom. They've accrued $300,000 related to this matter as of December 2023. This legal entanglement is a persistent risk. Now, let's put on our investor hats and look at the big picture. Cuentas Incorporated is in a precarious financial position. They have virtually no cash, a significant debt burden, and their core business generated no revenue in the latest quarter. They are heavily reliant on external financing and new ventures like their joint venture with World Mobile and potential public offerings to stay afloat. The fact that their internal controls are flagged as ineffective is another worry, suggesting potential issues in how they manage their operations and financial reporting. The company's strategy seems to be a mix of desperate measures to settle debts, restructure their business through joint ventures, and explore new capital raises. The disposal of assets and the focus on a joint venture show a shift in strategy, likely driven by the urgent need for cash and a way to move forward. However, the lack of revenue and the substantial going concern issues paint a very uncertain future. It's a classic case of a company heavily weighted towards future potential and strategic maneuvers, but currently lacking the solid financial foundation to make those maneuvers successful or sustainable. A reasonable investor should be very cautious. The company is essentially betting on future successes to solve its present problems. The success of the World Mobile joint venture and any future stock offering are critical, but to raise no guarantee they will materialize or be sufficient. So, what's our take? Cuentas is in survival mode, trying to reinvent itself while dealing with significant financial and legal challenges. That's our breakdown of Cuentas Incorporated's latest report. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.